Well, joining me here at the Up Summit is John Stevens, the co-CEO of Stevens Inc. It's great to speak with you.
Thank you, Morgan. Thanks for having me on.
So you became co-CEO at the beginning of the year. How's it going?
It's going really well. My brother and I are just 17 months apart, so we grew up kind of dreaming about working together one day and being partners even before we kind of knew what the business did or understood, how we do our work and what we do for our clients. So it really is a dream come true. Our dad had a great run from '86 until earlier this year as president and CEO, and he grew the business from 120 employees to closer to 1,500. And really, he handed off a great business that's doing well. So it hasn't been, there's been no fires to stamp out or anything like that. It's been a great year, and we've got our feet on the ground, and I think we're moving forward now in the right directions.
It's family-owned and privately held boutique investment bank. I guess, how would you categorize business today?
This is going to be a good year. We're up on 24 in terms of number of transactions we've advised on in the M&A space. But the dollar volume of our transactions is more than doubled this year over 2024. So that's exciting. Markets are good, so any wealth management businesses we have are doing well. And we kind of like to think about our business in terms of M&A and investment banking, which can be lumpy and cyclical, whereas our wealth management and insurance brokerage are more recurring revenue pieces of business. And so the balance of that has been very good for us, and I think we're excited to see how we can finish the year off.
What do you attribute that strength this year to? How much of that is sort of a sign of the times and the macro landscape? How much of that is what you're doing specifically at the bank to take market share?
I think it's been an interesting time for markets. I think Trump 2.0, I think he likes to kind of shake trees and shake things loose. And so at the beginning of the year, there was a lot of uncertainty, but I do think a lot of his pro-growth kind of deregulation policies and the tariffs impact is sort of coming through, and so I think there's more clarity now than there was at the beginning of the year. So I do think the markets are strong, and we've benefited from that. Really, I think we do a good job. We do a lot of our work with family-owned businesses in the private market space, and so we've had several very large transactions for us, private companies, family-owned, selling to larger strategics, which has driven our fees up.
So M&A, it's strengthening here. I know you talked about lumpiness, but lumpy in a good way right now?
I think yes, it's good right now. I think we expect it to continue to be good. We are seeing a downtick in pitches we're invited to, and I think our peers are seeing the same. I don't know if that's because private equity firms have had pitches in the last 2 years, but the actual transactions have been delayed as the bid-ask spread kind of needs to find out where it settles. And private equity firms need to sell these businesses, but I don't think they are necessarily getting the values they have on their books for the businesses. And so I think a lot of pitch activity happened, in the last 18 months, but the transactions themselves haven't gone through yet. So I think that could be a reason why we're seeing pitch activity go down. Generally, I think we're feeling pretty good about where we'll go in 2026 as well.
What are your thoughts on the IPO pipeline?
I think it's been a good year. It's been the strongest year since kind of 2020, 2021. I think a lot of that was driven kind of more speculatively than through fundamentals. That was kind of during the SPAC craze, and rates went down to combat COVID and all of the fear that was bringing into markets. And so we're seeing that kind of number of transactions go up and volume of transactions go up in terms of dollars raised. But in 2020 and 2021, that cohort of kind of IPOs, only 25% or less than 25% of those are trading at their offering price today. Whereas I think the 2025 IPO cohort, which has been a strong year for markets in general, the average trading price is now 30% above the offering price. So it just feels like fundamentals are more important than they were back then. And we're a traditional sort of value investor group ourselves, and we try to stick to those fundamentals when we advise our clients. And so for us, it feels good.
Healthier than a couple years ago.
Yes, I would say so.
How are you assessing value in this marketplace right now?
Well, I think strategics are paying quite a bit of money for good businesses. I think private equity firms are having to be more picky. I think, the last decade plus has been, low interest rate environment. It's been pretty easy to financially engineer good returns, and I think they're realizing that's not the case anymore. And so I think they're being kind of pickier on the way in, and when you do have a good asset, there's a lot of competition that can be generated for it. If you don't have a good asset, it's going to be tough to sell the business. So it's kind of a, there's winners and losers, as there always are, but if you're doing well and you have good fundamentals, I think you can really achieve great value right now.
Small and medium-sized businesses, what are you seeing in terms of health? What's the feedback from that customer and client base?
Yeah, I mean, there's a lot of really good ones. I think we pride ourselves for being in a part of the country where you might not expect an investment bank to grow and to thrive. And we do a lot of work with companies around this part of the country and in the middle of America, which there's a lot of really great companies, a lot of family-owned companies that we can kind of speak to and relate to, and they're strong. I mean, there's the power industrial kind of grid, with the data center build out. We're seeing a lot of investment in our part of the country because of that. We have clean water, we have cheap land, we have cheap labor. I think there's somewhat of a return to normalcy, I would say, from maybe mismanaged coastal cities into places like Nashville or South Florida or Austin, Texas, where governments are more business friendly and investment's a little bit easier. And I think we're benefiting from that as well.
Arkansas is open for business.
Arkansas is definitely open for business, yeah.
And of course, Stephens has its roots in Arkansas. So does Walmart. We're in Bentonville right now.
Yeah.
The ties between these two companies go back too.
They do. My grandfather and Sam Walton were contemporaries. We were a book runner on Walmart's IPO. I believe it was 1970. Pretty interestingly, it was a $4 million IPO, and the prospectus was 20 pages. And if you invested at that level, you did very, very well if you held on to it. We've done a lot of work with great companies up here, Tyson Foods, J.B. Hunt. We're really proud of that work. It really helps kind of launch us as an investment bank outside of New York. And to see these companies that are now massive and leaders in their industries, and the investment that they're bringing to this part of Arkansas and beyond is really exciting.
Your outlook on the economy right now, someone who's boots to the ground and working with all of these businesses?
Yeah, to us it feels pretty strong. I think we expect rates to come down by the end of the year a little bit more, and I think that's probably a good thing, although markets are at all-time highs. And there is mixed messaging in the economy right now. I think from what I've read, the labor job market might be a little weak, but consumer spending is going up. I think investment's going up from companies, and I think I hope that the tariffs and kind of Trump's early stage kind of economic agenda will work its way through and sort of be in the rear view in 2026. And if we get a little bit of a lower rate environment, I think it's going to be strong public and private markets in 2026 and beyond. So.
John Stephens of Stephens.
Yeah.
Thank you so much for sitting down with me here.